What I advise people is in a high cash value infinite banking plan, we avoid all the problems.
So what's the number one secret to tax strategies using infinite banking? Where should we start, Barry?
Let me start with the foundational background. Most people saving and investing for their future, retirement, whatever it might be, are following the model that Wall Street puts out there of 401ks, IRAs, right? Everything that's government-oriented qualified plan. The problem that you see with those traditionally, which by the way, most wealthy people don't invest in those, they're investing in real estate and their own business. But a lot of Americans invest in those qualified plans. The problem with the 401k and IRA, number one, is they are volatile. The market goes up, the market goes down. I'm reminded, obviously, of the crash of 2008. People lost 20, 30, 40% of their portfolio. And it took over a decade for a lot of those people just to recover to get back to even. The second problem is those investments are traditionally high fees, meaning a lot of the money or growth can be eroded from the fees that are being charged. And whether you make money or lose money, the money manager, the financial advisor, Wall Street, they're still making money. And then the third biggest problem is it's tax deferral. And I hear from CPAs often that it's a tax savings. Put money in a 401k or IRA, you're getting a tax savings. That isn't true. It's a tax deferral. What they're doing is they're kicking the tax can down the road to pay the tax later, and more than likely, they'll be paying higher tax. There's many reasons for that, but chances are they'll be paying higher taxes compared to what they would be paying on today. What I advise people is in a high cash value infinite banking plan, we avoid all the problems. Number one, you grow money guaranteed. You don't have to worry about volatility, and you're earning interest and dividends on an uninterrupted compound interest growth curve. Two, the fees are about 10 times less than what you would pay in your 401k or IRA. And three, it's tax-free. Now, there are some things we have to do to keep it tax-free, and that's my expertise to make sure people follow that plan, a properly structured plan. If done correctly, not only can you use the money throughout your life to invest in real estate, to buy other investments or invest back into your business, but then in retirement, you now have built up a large bucket of tax-free money that you can then draw on as tax-free retirement income.
Got it. Let me make sure I caught that. So the number one secret to infinite banking is understanding that Wall Street is not the best way with 401ks and IRAs and qualified plans. One, because it's really volatile. Two, because of the high fees. And three, it's only tax deferral. It's not tax-free or more efficient. And there's likely to be higher tax in the future. And whereas this infinite banking structure strategy, you can grow money guaranteed. You can earn interest and dividends, and it's about 10% less in taxes. And then if properly structured, it can be tax-free. Is that a fair summary?
Yeah, 10% less in the fees that you would pay in that type of plan compared to a qualified plan. And you are growing money tax-free, yes.
Excellent. Okay, so let's talk about that. So what's step number two? So once you see that that's the challenge, and then what the goal is, what would be step two to setting this up or getting it going?
We always look at a client's numbers. I want someone to see exactly how this plan's going to work for them. No two plans are exactly the same. So I'm looking at what are your goals, age, health, income, what do you want to achieve in the future? Do you have plans where you want to take policy loans early on to go invest in real estate and use policy loans for down payments? What do you want to see as far as retirement dollars? Most people, if they're investing in qualified plans and all their income in retirement is going to be either taxable or tax deferred, I often ask this question. Think of these three circles in your mind, and these three circles would represent buckets of money. Tax deferred, taxable, tax-free. Which bucket do you like the most? 100% of the time, people tell me tax-free. But the next question is telling. Where's most of your money? And people answer 9 out of 10 times tax deferred. There are taxable buckets as well, like real estate and CDs, etc. But most people want tax free. But when they look at their portfolio, Brett, they have very little, if any, money in the tax free bucket, but it's what they want. So we go to work on designing a plan for them so they can see their own numbers.
Excellent.